Typically, West Texas, we're pretty insulated from downturns because of the oil and gas industry. Though again, it's worth noting the price of oil has dropped. Is that a sign that our region isn't as insulated as we think? Jonathan Polasek took that question to industry experts. Jonathan, what'd they tell you?
Hey, Tatum, it's definitely a question worth asking, especially considering that the price of oil has dropped nearly $20 in the past 10 days or so, at the same time as rising interest rates and inflation. So should we be concerned? The expert I spoke to says not necessarily. We know the cycle. What goes up always comes back down. Oil dropped down to $104 a barrel. But is it a reason to worry?
I don't want to say it's a concern. It's a concern for speculators. You know, the true price of oil is somewhere between $90 and $100. Everything else is speculation that's based on expectation of the future. So if the Fed does slow the economy down, recession or not, a slowing economy means less fuel consumption.
When it comes to recession, Cargill says we need to redefine what it means to us here in West Texas.
A recession is much different in the Permian Basin than it is throughout the country. Here we define that as boom and bust rather than recession and growth. Right now we're in a boom period that's likely going to continue for a couple of years regardless of what happens in the United States economy.
Cargill basing that on demand for oil, increased production, and in turn, a rising rig count.
When the demand is high and the price is up, our activity out here is quite strong. Our activity is based solely on rig count. So you can watch the rig count. It doesn't really matter what the number is, but as long as it's going up to stable, our economy out here will be very stable.
In fact, Cargill doesn't see much impact on the oil and gas industry unless we see what he describes as a harsh recession.
If we entered a harsh recession, then that's certainly a possibility, but I don't see that as happening. I think the recession itself will probably just be a marker that maybe we don't notice very much. Hopefully it slows down the growth of the inflation rate.
So we've talked about oil, but what about other commodities? Will those prices go down, such as food and clothes, as the Federal Reserve raises the interest rate? Well, probably not, as the Fed is focused on slowing the rate of inflation right now as opposed to the inflation itself. Tatum?